What does it mean to act against your own idea, or what does it mean to force a trade in the market? So I'm going to take today as an example. Today, I saw the market right off the bat was not moving. The 930 candle did not break through a low, did not break through a high, and the whole Tokyo session last night, the market did not move. It became a range and it started ranging. And it started ranging actually even from yesterday around 2 p.m. It started ranging and the 930 opened and it was still in the range. I saw no volatility in the market. I saw no movement happen in the market. And I compared today compared to yesterday, and I looked back at yesterday and I saw the market was volatile. It moved 930 open and it broke through the range that we created the previous night for a few hours, and we broke through that range and we started moving. So when I took that short position yesterday, it was good. It was very good because the market was volatile. It was moving and it clearly was showing us that it was going to make a move that day. But today, the difference was it was still in that range. It was still chopping around at 930 open, and it did not break that chop. It still was in that tight range. And right off the bat, I saw, hey, the market does not look like it's moving. It does not look like there's much traders in the market today. It doesn't look as volatile as yesterday. I don't believe my edge is going to work. If I try to take a trade today, I don't believe it's going to work. But what happened, and this is what it means to force a trade. So what happened is I went in and a long opportunity presented itself and my edge presented itself. My edge got hit and the long opportunity presented itself. But I knew in the beginning, hey, this is in a tight range. I could very easily enter this trade and then it reverses the exact second or a few minutes later, it reverses and hits my stop loss because we don't have any kind of volatility and we're most likely not going to move today. And I was targeting a big move. So I was willing to risk $200 to predict that the market is going to move today, but I also knew the market was not going to move today. So I went against my own idea, and I tried forcing a setup. And what happened is I ended up catching a losing trade today, and I lost $200. And that's what it means to force a trade in the market. When you clearly tell in the beginning of the day, hey, this is probably not going to hit my edge. This is really not looking great. Like the volatility is not there. I don't see my edge really presenting itself today. Like I don't see it playing out today. And you still take the trade. You're trying to force an edge upon the market that you can clearly tell there's no volatility and we're probably not going to move today. And if you do want to take a trade that day, then realize, hey, I'm probably gonna have to have a very tight stop and target a lot less of a move because clearly the market is not volatile and it's not going to really move. And that's where your edge comes in. You could clearly tell that today's not going to move and you would have had a higher probability setup. I would have had a higher probability setup if I targeted a less bigger move, which I did not. I tried forcing the setup and tried saying that, and I bet money that the market was going to move today when my first idea was the market was not going to move today. So I went against my own idea and I ended up trying to take a trade, forcing a setup, forcing an edge upon the market that's clearly not moving. We have to take what the market for what the market is. If the market is not moving that day, there's no news coming out, there's no volatility, you can clearly tell that it's dry at the moment, you should stop trading at that moment and just leave for that day and preserve your capital for the next week, or just target a lot less of a move because you can clearly tell the market's not volatile today. It's really not moving whatsoever. And that's exactly what it means to force a setup and go against your own idea. And that's exactly what I did today. And it's a learning experience. So not only did I risk $200 to go against my own idea, but also I've learned today, and I took that $200 as a learning tuition to learn, hey, listen, if I don't see the market move today, it's clearly not going to move, and I need to act on that idea. And if I do want to take a trade today, then I got to be a lot smarter and a lot more careful and putting a lot tighter of a stop and targeting a lot less of a move. And that's when I would have a higher probability. But still, the markets are not very volatile and it's very dry. So it's clearly probably not going to move today. and plus there's no news coming out in the next few hours. So that's exactly what it means to force a setup upon the market that's not moving, and that's also exactly what it means to go against your own idea. So I hope you learned something in this video. I definitely learned from today and going to improve on the next week and the next few months of trading. I'm going to improve this and do better. So I hope you do better as well, and I hope you learned something from me and from my own experience today.